Hey guys, so welcome back to the channel. Today I have a new trading strategy which I'm going to backtest for you over 100 trades. I'll first tell you about the indicators we're going to be using, show you a few examples, and then perform the backtest. So this strategy involves three trading indicators: the exponential moving average, the Laguerre RSI indicator, and the ATR stop loss indicator. So guys, if you want to support this channel and receive exclusive access to all the strategies we've backtested so far, please check out our Patreon page. We will also have a Discord live chat, which you can use to ask any questions to the community. The first 30 people joining the middle tier will automatically have full access to the top tier at no extra cost, allowing you to send a strategy for me to backtest. I know a few of you have joined already, so thank you so much. I will create a video similar to the one you're watching and present everyone with the results. So please consider having a look at the first link in the description, and I hope to see many of you on the Discord community. So an exponential moving average, also known as an EMA, is a type of moving average that places a greater weight and significance on the most recent data points. The exponential moving average is also referred to as the exponentially weighted moving average. It reacts more significantly to recent price changes than a simple moving average, which applies an equal weight to all observations in the period. That's a lot more accurate and it reacts quicker. Now, the second indicator we're going to be using is the Laguerre RSI, which is a modified version of the standard RSI with simply reduced noise and lag. The indicator is also more responsive to price and has fewer whipsaws. The idea is to buy when the indicator crosses above 0.2 and to sell when it crosses below 0.8. You may have a strong uptrend when the indicator stays flat above the 0.8 level, and the opposite is true when it stays flat below the 0.2 level. So this backtest is based on the 1 hour time frame on Euro USD. So here's the strategy. We go long when the FE alpha line crosses the indicator from above and the price is below the EMA, and we go short when the FE alpha line crosses the indicator from below and price is above the EMA. We place the stop loss at 1 ATR based on the stop loss ATR indicator that we're going to be using. We don't have a maximum number of trades that we're limited to. We're going to apply a strict risk to reward ratio of 1 to 1.5, and when the open profit reaches 1R, we move the stop loss to break even. So let's get on the charts now so I can show you a few trades and then we'll dive straight into the backtest. All right guys, so here we are on the charts on the 1 hour time frame on euro dollar. So we'll go ahead and add the indicators. So the first one that we're going to be using is the EMA. So that's pretty standard. The second one is the ATR stop loss. And the one that you're going to want to get is from Gareth Yeo. And the final indicator is the Laguerre RSI from Everget. So we'll add this as well, and we'll go ahead and change the settings. So for the EMA, you're going to want to change the setting to a length of 50, and then you can change the style. I like it white with a thicker line so that it's straightforward and you can see it clearly. You're going to change the method to EMA and then you click OK. Then the ATR stop loss, the settings of that will remain the same. So it's a 14 period RSI with a multiplier of 1.6. Feel free to change the colors, but I'm going to leave them like this. And then finally, the settings of the Laguerre indicator are going to stay the same at an alpha of 0.7 and a fractals energy length of 13. And the same again, feel free to change the colors, but essentially the line that we're going to be using is the FE alpha line, which is the purple line. So we'll go ahead and show you a few examples. So the strategy is, if the price is lower than the 50 EMA, then we're looking for short positions. And similarly, if it's above the 50 EMA, we're looking for long positions. And so you can look at that purple line, and if the price is below the 50 EMA and the purple line crosses the other line, we go short. We go short right here, and then we place the stop loss at the ATR value of the previous candlesticks. So Let me show you a few examples and then we'll dive straight into the backtest. All right, so here are a couple of examples. The price is above the 50 EMA, so we're looking for long positions. We've got the purple line that crosses from below. We've got the purple line that crosses from above right here. So on the next candle, we take a long position. We place a stop loss at the last ATR and we're aiming for a 1 to 1.5 risk to reward ratio. So that's a successful trade. Similar here, the purple line crosses from above. So we're taking a long position. We place a stop loss at the last ATR, a 1 to 1.5 risk to reward ratio. So that would have been a successful trade. And here we're taking a loss because the move has been exhausted. And if we move a bit further down, here we've got a short position. So the price is below the 50 EMA. The purple line crosses from below above the other line. So we're taking a short position and we place the stop loss at the last ATR, which is right here across the red candle. We're looking for a 1 to 1.5 risk to reward ratio. So let's go do the back test, see how this performs over the long term over 100 trades on the 1 hour time frame, and I'll see you for the results. So there you go, guys, the results of Euro USD on the 1 hour time frame. We had a maximum drawdown of 19%. We were risking 5% per trade with a risk to reward ratio of 1 to 1.5. We had 54 wins and 43 losses with a maximum of 3 wins in a row and 4 losses in a row. So that gave a win rate of 56% over 81 days. So that's an 87% net profit. So if you would have started with $10,000 in less than 3 months, you would have ended up with $18,700. So this strategy is a great long-term strategy. The fact that we had a fixed risk to reward ratio really helped the consistency of the strategy. I'm certain that this can work on a lower time frame. I've seen people use it on the 1 minute time frame. If you trade this strategy during, the London session or the New York session, this can, really work over a couple of hours on the 1 minute time frame or even on the 5 minute time frame. So let me know what you guys think in the comments, and I'll see you in the next video.